Oh, hey, we're doing a podcast, are we?
Yep.
Hey, this is Darren Harper with
Welcome back to
Oh,
Deep
you can
Dive
interrupt me
with
right from the
Daniel.
start.
I'm Daniel. That's Darren. And we're about to go deep.
Deep,
Deep
deep
in what,
dive.
Darren?
Deep dive with our DD. Anyway, this is Daniel Hopwood, and we're doing deep dive with Daniel. This week's subject is, did I say I'm Darren? I think you did, but in the intro. Anyway, with arbitrage trade. Hey,
He's
let's get it
Darren. I'm
together.
Daniel.
We're acting like it's Friday or something. All right. Our subject today is understanding activist investing. It's a dual-edged sword in the financial world. That sounds like there's a good and bad. So, Daniel, would you give us a kind of an overview of what you wrote about this week with activist investing?
Yeah, so this week we wrote about how large funds use their power of having a lot of money to buy up a lot of stock in a company to affect change. And before it was ever called activist investing, which makes it sound, potentially kind of nice, they used to be called hostile takeovers. So essentially, what this all means is that, well, a very famous guy named Carl Icahn, he's one of, kind of the OGs at this, takes billions of dollars, buys a ton of stock, we're talking a few percent of a company, to be able to gain a board seat, to go into the company, shake things up and affect change so that they can increase shareholder value or unlock shareholder value is what they would consider it.
So you're saying activist is a good thing.
I think it can be. And if you
I'm reliving
listen
the
to,
last few years, and I don't know. Okay, I guess in the stock market it might be. Just in general, activism has kind of been a big topic of concern in the country lately.
yeah, in stocks, it has almost sheerly only to do with making more money
Well, in the end, yes, but I
or
think it
bringing
also
down a potential fraudulent company, right? Also,
and it
which we'll
also
talk
could
about.
really oh, nice teaser. It also brings in if there's an overwhelming agenda that needs to be executed, let's say like ESG or something like that, then it's a great way to make that happen via board seats, right?
Mm-hmm.
And then that kind of just trickles down to the rest of the country. We don't have enough time for all of that, but we're going to just
I
stick
forgot
with what
my
we talk
tinfoil
about.
hat in the kitchen.
Isn't it in production? It's probably coming from China. It might take a couple of weeks. I don't know
I,
to
I
get
think
there.
I think we're getting things under control, the supply chain.
Yellen's going to make sure that you
Yeah,
get your tinfoil hat delivered this week to
that's
your
the goal.
home. If not, you're going to go over to Asia and get it, which is actually a real possibility for you. All right.
Yeah.
So in general, it's to basically get board seats. Is that right? I mean, so that you can have control and decisions made at a company.
Well, really, it's to affect change in a company to, make money. So you can think of it as instead of a company investing in Chipotle because they think it's going to increase value, they're investing in Chipotle because they see something that is going on with either the management team or the business to where they think they have a better idea. So they want to achieve having a board seat to implement that idea.
Okay, but couldn't it be kind of a backward way if you really wanted to see a company go down to be an activist to improve the company, but then when you get in, you make decisions that actually will hurt the company? Or have I watched too many series on TV that show that?
No, I mean, I think
Like Raiders, they call them Raiders, right?
yeah, corporate raiders. And an example of that is when Bill Ackman very publicly had $1 billion short on Herbalife. And, I don't believe he ever had a board seat at the company because I don't
Hmm.
know why you would take a board seat on a company that you are predicting should fail.
Right.
But he had a huge short position and then, was very public about it with the goal of other people piling into his short to have the stock pressure to go down. And ultimately, if a stock goes too low, company fails, has to file for bankruptcy kind of thing because they don't have any money left. But in this
Right.
particular case, his arch nemesis, Carl Icahn, came and went long on the company. And a lot of people piled on with Carl giving a really bad squeeze to Bill Ackman, which ultimately Bill had to close it short at a pretty substantial loss. But that was a pretty unique example of two activists taking the opposite side of each bet. But ultimately, that's what makes a market.
Yes, it does do that. It makes shares trade both ways. It definitely sounds like a superhero. You got did you say arch enemy or what did you say?
Oh, his arch enemy?
Arch enemy. Yeah,
so if you ever want to listen to something
comics.
interesting, listen to Bill Ackman on Lex Fridman. It came out maybe in the last month, and it's very interesting to hear Bill Ackman's recollection of that whole thing and how before that ever happened, there was already this thing that happened before that made Bill not like Carl Icahn, even though Carl Icahn at the time didn't dislike Bill, but now there's a pretty big tiff between the two of them.
Well, and the most recent one of note, of course, is in fact Disney, and so Mr. Peltz failed. He tried hard. He came in. He had a lot of ideas, and it's almost like running for election. It feels like, because you have to get people on the board to quote vote for you, and it didn't work with them, and so he got shut down. This is his second time, I think, to be a quote activist investor for Disney. So I have a feeling he's not going to give up.
Yeah, I mean, something that's interesting.
He's not that kind of guy.
In that particular case about activist investing is with a company like Disney that is, S&P 500, super large market cap in multiple categories that's held by multiple ETFs. I believe Vanguard owned like 30% of the shares of Disney. And, whether the listeners know it or not, if you own an ETF, you don't own the voting rights to your shares. The fund who manages it does. Mm-hmm. So in this case, Vanguard is kind of voting on your behalf. And I believe they ultimately ended up voting for Bob Iger and, the Disney side of the house. And in this case, the guy who owned Lucasfilms, he owns a bunch of shares at Disney from when they bought him. He voted for Disney as well. So, they were able to pull a lot of the really large shareholders their way, which ultimately led, I believe, the activist side only got 33% of the vote, where the other side got 75% of the vote.
Wow. Yeah. And I'll put my imaginary hat on. Let's say that I own a company, or I'm on the board of a company, and I want my shares to go down because I'm going to put shorts in. Maybe, or actually go up, actually, in this case. Let's do a whole theatrical event where we bring in Mr. Peltz and he's going to, make the company better. And so shares go up, and then we'll vote against him, and then it'll come back down again. And we've made money both ways. So that's my conspiracy. 5 seconds is that you can bring an activist investor on so that you can just move the stock. And then once that's all done and we've made our money going up and down, we'll say, "Oops, okay, I'm withdrawing my activism."
The secret powers that be, Darren. No comment. No comment.
Okay, all right. Sorry, I don't take things at face value. I'm sorry.
That's a whole deep dive for another day. If you look into it, who really owns Vanguard and BlackRock?
Yeah, so we're gonna go back and talk to 7 families and stuff. We could go way back.
I like the theory that the Rothschilds run everything, but they've kind of
now you're gonna start it anyway. All right,
but they've been proven to not have that much money left. So I don't know. Once upon a time, though.
And then who owns all the media? That's another vlog as well. Anyway, we're teasing for future possibly here. So you got any wrap up conclusionary words? Is that a word, conclusionary? I just made it one if it's not. About activist investing. Last words.
Yeah, I think it can get a bad rap because a lot of times their intentions are very short term, but I think they are necessary to kind of wake up sleeping giant companies to whether it is they need to implement new technology, they need to spin out a business unit or two that is, profitable in and of itself and create value elsewhere. So I don't think they're all bad. And if you listen to an activist investor, of course, they're going to say they are doing the right thing. And, I do think it's important that we are able to short companies like Herbalife, which in my opinion is like a pretty bad pyramid scheme. So,
Right.
I think they're
Mhm.
necessary. Are they always, have the interest in the long run? No, but I think they're well intended. And it's good that there's another side voting against them as well to keep everything in check, right?
Right. And as we all know, in the end, money wins. So that's what it's all about, whether it be making a company better or shorting it out to its bankruptcy and not having to pay for all the shorts that you put your money up for. Either way, it's a
Well, you
battle.
could try to
It's
hold it to zero like Melvin Capital and then, go bankrupt.
and suddenly appear. All right. Thanks, Daniel, for your input this time and your unique input as well. This is Darren, and we will see you next week on Deep Dive with Daniel. Thanks, Daniel.